Okay, welcome to this video of my forex strategy. Okay, the internet is acting funny. It's off right now. But okay, so my strategy, primarily I want to remove this GBP, JPY. I only trade Nasdaq, US Tech 100 and gold, right? And why I trade those is because these are primarily US driven markets. By that I mean whenever the US stock exchanges open, these two are opening. So because of the time differences, the US markets primarily open around, I don't know, 8 o'clock their side, 8:30 or so. So here it will be 2 o'clock. So you see, if you check here, New York session right here, it starts around 2 p.m. and there's the overlap with the London session. So there's a high volume, high probability that the market is being moved at this time. So the highest quality trades are found between, for me, for my strategy, from around 2 p.m. to around 4 p.m. or you could say 6 p.m. But then I haven't really found any good trades from 4 to 6, but primarily 2 to 4, 2 to 4. That's when my amazing trades happen. Okay, so that's one aspect of the strategy. It's like the time that you're trading. Although it can work at other times, but then this is like when you have the highest probability type of setup given what you're trading. So if you're like if you're busy in the afternoon, you could arrange that your time, maybe you trade in the morning because in Zimbabwe here, maybe you're free in the morning, so you can start trading at around 8 a.m. to around 10 a.m. And you see that there's the overlap between the Tokyo session and the London. So you might plan to trade maybe the Japanese yen, the currency in Tokyo, Japan, against the British pound, the currency in London, meaning that there's like the British pound against the Japanese yen. That's the pair that has the highest probability of moving during the overlap of these two sessions, or even in London session on its own. But for me, because I want to structure my day in such that I trade in the afternoon because I'm busy with school in the morning, I trade primarily 2 to 4. So that's one key aspect of my strategy. Okay. So let's go to the chart. What's up in the internet? Um, let's see. Doesn't matter trader network. So let me start by opening this gold chart, right? Um, so the thing is with gold, I trade gold between 2 o'clock and 3. I'm like I recently discovered this. Like this trade that always works, always works between the hour of 2 and 3. There's always a trade on gold. And sometimes I miss it, sometimes I am quite wrong about it, but then there's always a trade according to how I trade, to the strategy that I'm about to show you, between the hour of 2 p.m. and 3 p.m. Plus 2 GMT. So for example, today, although I missed it because I was at school, I'm not gonna give that excuse, but then, you know, of course. So my broker, as you might see here, down here, if the time down there, let me show you the time down there, the black thing there is showing currently 3 o'clock. So for my time to be synced with the broker's time is 3 o'clock. It's an hour ahead of my time. So when it says 3 o'clock, that's actually 2 o'clock. That's when I'm getting into the market. When I get into the market at 2 o'clock, I start from from the 4 hour or the daily, just to check my zones and to see how it is. But there isn't really much that I find on the daily. So these are my past trades. I'm going to get into them if I can. So I primarily started the 1 hour, right? So on the 1 hour, what am I looking for? I'm looking for inefficiency. What's inefficiency? You see this space, um, this space between these two candles. You see that this candle, there's nothing on this side, nothing on this side. It's just clean, just going down. Compare to any other candle. You see this red one. There's a wick that's getting to this eye, and this wick that's getting to this eye. So there's no inefficiency. And inefficiency means that the market has moved so much that there hasn't been any. So for example, the red candle is signifying that the market was going down. So there are people selling this market, So if there's an inefficiency as signified by this candle, means there are so many sellers that they didn't give a chance to the buyers to bring it back up as a wick, then go down. So that's why you see it as clean as that. That's why you see this wick that comes into the 50% of this, then goes down. That's the that's the trick of it. And for me, this works. You see that there's also this inefficiency on this blue candle, on this green candle. It pushes up so hard, but then you see that there's no reaction when it comes down. Just it's just ignored by this, gets to this order block. But I really don't think there was anything good to trade there given the time. But anyway, let me go back. Right. So let's say I'm just looking at the chart at 2 o'clock. I go down from the 1 minute, 1 hour. There's no inefficiency. Pretend that the market is still around here. There's no inefficiency on that now. So I go down to the 30 minutes. Um, wait, let me scale fix this thing. What's happening? Oh, I'm locked. 1703. Okay, great. Now I can do this. So, as you might see, I'm now on the 30 minute. Is there inefficiency? Yeah. So when you're looking at the left side, I did not see this. That's the problem. You see the trade that I took here. It was a losing trade, but I did not see this for some reason. I was in my lecture, so I think my analysis was just up. So you see that this small gap right there. That's what we're looking for. Because as you can see, at 2 o'clock, this is now 2:30. If you look at the time down there, it went down to that level and shot up, and you would have entered the buy right there. But then we go down to the 15 minute to refine this inefficient, and now it's clear. Now you can see that this is one green candle here with no wick on the other side. So we put our inefficiency there and to this wick, showing that there are orders still in between this level. So if you now look at here, you see that it fills it nicely, nicely. And I did not see this. And it pains me so much that I didn't. But yeah, that's what trading is sometimes. So go to the 5 minutes now. And so looking at our inefficiency, now it gets noisy. Now it gets noisy. So when you see things getting noisy, because now we have inefficiency there, inefficiency there, inefficiency there. What do you do when it gets noisy like this? You see that we took this from the 30 minute to the 15 minute time frame to the 5 minutes. So where the higher time frame was, that's where we're going to respect. We're not going to respect anything down below here unless the market shows that we want to respect it. So we respect this inefficiency just there. We're refining our entry. And as you can see again, it enters so nicely here. Enters so nicely there. So now we go to the 1 minute. 1 minute time frame is where we enter our trade. Why, how, and why do we enter our trade? Okay, before you get to this trade, let me explain why I took a loss here. I had this level, but then you see now the problem here was if you go on the 15 minutes, there's nothing, right? And so it was actually a wrong trade in the sense that there was nothing on the higher time frame that was confirming this trade. It's only on the 1 minute, and as we might all know, the 1 minute time frame is very, very noisy. So this was already an invalid trade by that reasoning, and I just missed that. I just completely missed that. So my confirmation is, you see that the red candles going down, going down here, but no candle is let me check something. Okay. No candle is closing above the open of the last candle. So it's progressively going down, going down, going down until we get to this one green candle that goes up. So for my strategy, it's like a high risk, high reward thingy. So whenever I get this one candle, I'm now entering my buy, putting my take profit around there, and my stop loss just down there. And my stop loss was just what 67 points, and I was expecting to win 300, and which is a risk to reward ratio of 1:5. So I could have won times five of what I was risking. But then, of course, I was entering at the wrong time. So this was a very invalid trade. So I kept looking at the markets and seen it go down there and reacting the way it did. Why I would like to believe that I would enter the trade here, right? Because that's the only green candle that has broken the last red candle. But then I think I would have loved to enter on this green candle because now I have the confirmation one. The first confirmation is the time that we're trading. We're trading between the hours of 2 p.m. and 3 p.m. Two, the other confirmation that we have is we are seeing a failure of this green candle to no wait, I mean like the failure of this red candle to continue going down. The green candle goes up now, so we see, but I wouldn't have liked to enter here, so I think I would have entered there, put my stop loss below this candle, 106 points, and targeted this high, a 1 to 6 trade, and this would have played out nicely and gone to the stop because of the news that came out. But yeah, we missed that. So that's one example. So let me give you another example. Yesterday there was nothing. So you see, I didn't take any trade. There was nothing that particularly interested me. Given the way. So let's check. Let's check. Let's just go for. Oh, there was something. There was. So what we do, we look left. We look left and see where market the price could potentially target, and we see that there's this big inefficiency right here. But this inefficiency is way too big. How do we know where to start? And this is actually the 4 hour time frame that I'm on, as you can see. So we drop down to a 1 hour, and we see that okay, we could refine it to sort of like on top there and just there, but still it's just way too big. We're trying to refine it to go down. Now we see something. We go up there, then we place it there. Let's see. So yeah, it's still okay, still playing. Let's go to the 15 minute. Let's perfect this entry. Let's perfect this inefficiency. We're going down there. Let's go to the 5 minutes now. 5 minutes. What is this showing us? It's showing us there's an inefficiency down there, but we're trying to respect this one. But we're keeping in mind that there's this inefficiency on top of the order block, which is another strong confirmation of a trade, but then we'll get to that later. I'm just trying to show you something simple here that you could apply in your trading. Let's go on to the end. Yeah. So now let's check what could have happened or how we could have been a participant in yesterday's trading. So you see here, the market comes and just displays ugly price action because what we're looking at is just a drop into the price and a shoot up. So let's go back and refine this inefficiency to the 1 minute time frame. So I didn't enter this because the I don't like having to refine this to such a low time frame. Makes it feel like a lower probability trade. So let's go down there. But then efficiency is now ending there. You see? So let's just see how it goes. Let's go end. Let's go back and see what we could have done yesterday. So you see, price does whatever it does here. Then it reacts from the lowest part of the inefficiency as we'd have analyzed from that side, but then I wouldn't have liked this. It was too noisy here. So yeah, yesterday's it was there, but then it was not as good as I would like to trade. So let me look at other trades that I took. Oh yes, this was a nice one. This exactly. Okay, I took this trade. At least I have proof to show you that I actually trade the things that I talk about. So yeah, this was what? This was the 17th of August. So what are we seeing here when we get to the markets that are this is 145, market started 2. What are we seeing here? Inefficiency. Great. Then we put out a box there. Then we're looking for what? For a reaction from there. So now I have already got my inefficiency from the 15-minute time frame. Let me drop down to the 5 minutes and see if I can refine it further. So we see that there's this wick that's getting there. I could maybe put it just there. Okay, right, great. Let me go down to my 1 minute time frame, which is the time frame from which I enter my trades. And we see price goes up, rejects from this level, but then we wanted to really get into this inefficient zone, gets into this level. We're waiting for now for the red candle that's breaking the low of this other candle. So one thing, if you remember candlestick shapes and sizes and patterns, you'll see that this candle is like a pin. So a pin bar candle, is it? Oh, so wait. Anyway, yeah, we see that the red candle breaks the low of this candle, of the previous green candle, and the shape signifies that there's strong selling of the of the market. So I entered my sell right there. So yeah, I was taking partial profits. My first target, I shouldn't have taken it. The thing is, I wanted to take my first profits off the table here. But the thing is, I thought this could have been a problem. The market could have retraced, but then I should have done better. So I took half the position off here. Then I left it go down to my second profit taking zone, which is around here. Took half of that remaining trade off, then took the remaining trade out at the end here, which was a nice trade that gave me 44 bucks. But I didn't risk as much as I should have. Let's see what this trade was. Okay, this trade was actually a wrong one. Let me see. Why did I trade at 4 o'clock? I don't know. Anyway, on the 18th, let's see. Why didn't I do anything on this day? So, okay, let's see what we could have found on the 18th. 4 o'clock. This is the candle. This is the 2 o'clock candle. So let's see. We see that there's no inefficiency. There's nothing here to interest us. But we could see that there's a lot of noise here. This is an inefficient zone here. This inefficient zone here. So what we could have done, we could have marked up this zone, and this zone, this one in particular, is better than this one because we have this order block right here. So this was better than that. But we're just gonna see what we go and go down to the 5 minute time frame. Oh, nice. So we see that this is the inefficient zone that we had marked up on the 5 minute, on the 15 minute. Now we go to the 5 minute and we refine it further. There we go. We find this inefficiency right there. Now let's go down to the 1 minute, from which we find our entries. So yeah, yeah, I remember why I didn't trade this. I didn't trade this inefficiency solely because there was news at this time. So you see the market was just ugly right here. So there was really nothing for me in the market that day. But I always think that this order block on the 1 minute could have been a nice entry, but then as you would have seen today, this did not work. Oh, but this was an inefficiency on the 5 minutes. So this was a great one. This could have been better. On the 5 minute, there was inefficiency with an order block. Oh, nice. So I could have been a participant in this. Should have been, but it wasn't really interesting me at the moment that I was trading. So what I could have done, we find I was onto this level. Enter the first trade of this inefficiency right here. Here, then you could have got maybe 10 pips, which is nothing to cry about. Then you see there's this entrance into the zone. I really don't like this trade. I would have left it anyway. So, yep, that's that. Now let's see. Is there any other day that this 2 o'clock? Ooh, this day was ugly. Yeah, I think that's why I didn't take any trade here. It was ugly. Oh, this day that I made a very stupid mistake. Oh, I remember this. I remember this. Oh, um, yeah, but you get the idea, right? Let me just show you another variation because this trade, this was very funny. This should have been a winning trade, but I left it. We're gonna see why. So we're not only looking for inefficiencies, we're also looking for lows like this. This was a low. There's an order block, big order block right there. We refined it down to this level. If you go down the 15 minutes, you'll see why I said we refined this. Yep, we're looking for the loss. So really the order block is right like this, but when you refine it, shouldn't be that big because from which zone do you actually take the trade? So we refine it to this last red candle right there, right? This is the right candle we refine it to. Then we go to the left. Now, why I said this was stupid, or why I was stupid, I saw price get into my zone at around 1 p.m. and I was trying to trade it. Go. So the whole day, there's the backstory. The whole day, market had dropped from here all the way down to here. So usually, when the market drops during the Asian and the London session, there's a reversal during New York session. So I told myself that I was like, okay, let me enter a buy position, which I entered here with my stop loss just down there. So since I do not like seeing price dance around in my stop loss zone, I removed half the position here. And when I saw price getting down there, I removed all the position. And I regretted because the very candle from which I removed the price, it went up. It shot up. It shot up. But that's one other variation of how you trade gold. So you're looking for order blocks, you're looking for inefficiencies, and you're looking for that confirmation. Okay. Is there anywhere else that I traded this? Yeah, there was this nice trade. I think I took here the Souls, was it? I don't remember. Yeah, and this one too. This is a nice one. But you get the gist of the of how I trade. That's the whole picture. That's how I trade. That's how I try to make money from the markets and milk the markets. Today could have been better, and I have learned my lesson to actually focus deeply on gold during 2 and 3. I will show you how I trade Nasdaq. Nasdaq is just funny. You see that I have these numerous zones. I took a loss. But this was a buy position that I entered. Came to break even. There was nothing there. This was a sell. Just a small loss was it? I don't remember. Then there's this loss. I entered the sell here, right? But this was on my phone. This was a mistake. I should have entered this on my laptop, and I would have seen that this was the height from which price was going to react. So I shouldn't have entered here and took all these pips, 75 pips, stop loss just above the high. Would have been a very 1 to 10 hour trade. But yeah, that didn't go according to plan. I could have entered another trade also here at this top, seeing the wicks, the rejections from there. Then this one big red candle pushing price down. Could have entered there, stop loss above the high, let it down, then could have made money today. But no, and there was inefficiency here. Oh, I didn't notice that. So what we're looking for always, we're looking for inefficiency. That inefficiency is where money is in the market. So yeah, you gotta be on the lookout for that always. So yeah, great. I don't think there's anything else. If you have questions, inquiries, some clarification, you just tell me. Great. Okay. Today could have been better. Tomorrow we're gonna come out guns blazing, knowing what we have to do, focusing on what we have to focus on at the time that we have to focus on something. Yeah. So yeah, I'm done. This was also analysis for me. Yeah. So you see, I made so much profits during here, which I was learning GGG. And so many of the losses came because of that psychology. You see the gold trade that I exited when I was supposed to not exit, when it went up, when I just exited, and these were just very bad trades. Yeah, I threw a 30 lot on this one. I was very trading not in the zone. It was very just stupid trading that I was doing there. But in total is what some. I've made $188 of these trades, which is just fine, but I'm not liking these trades. They're just way too many, and I need to refine that in my trading. So great. Stop record. How long has this been? It's not writing. I can see.